Hi, I'm Jonathan McDowall. I'm a financial planner with MHA Henderson Loggie Financial Planning. I'm often asked by business owners, can I use my pension to buy commercial property? For some individuals, this can be very beneficial and very tax efficient. So in today's video, I'm going to cover off why we might consider using a pension to buy commercial property and the pros and cons of doing this. Well, firstly, if your business already owns the property, then purchasing within a pension can release capital back into your business for investment elsewhere. Or if you're buying new premises, using your pension can provide a very tax-efficient way to buy that property. The key positives of holding property within a pension are that when the property is held within the pension, it can grow free of tax, so there's no capital gains tax on sale. The rental income that would be received within the pension would also be free of income tax. If you're still the occupier of the property as your business, then the rent you would pay to the pension would be deemed as an allowable business expense. Once the property is held in the pension, it would no longer be subject to inheritance tax if that was an issue for you. So once the property is held within the pension, it is not accessible to creditors, for example in the event of personal or business insolvency. If you didn't have enough pension funds as an individual, you can combine pension funds with other fellow business owners to purchase the property within a pension. In a similar way, if the pension funds weren't sufficient to be able to buy the property, a pension can borrow up to 50% of its assets to help it purchase that property. Finally, holding the property within a pension can serve as a good form of exit planning at retirement if you're intending to sell your business. You could retain the property within the pension and still then potentially receive ongoing rental income to help towards meeting your retirement income needs. I recently had a client who was looking to expand his business and acquire new premises to do so. He needed advice on how best to acquire that property, and he basically had three options. He could have either rented a new property, purchased a property with his company, although that would involve borrowing to do so, and thirdly introduced the option of using his pension fund to buy the property. After a detailed assessment of the individual's pension provision and financial circumstances, I was able to advise that using his pension funds to buy the property was a suitable option for him. In this case, the individual had enough funds within his pension to be able to buy the property in mind. However, if he hadn't, we could have looked to make additional contributions to allow him to do so. The result of this being that it allowed the individual to buy the property in a tax-efficient manner using his pension fund and without having to borrow to do so. In the long term, this should provide a very beneficial asset to hold within the pension, with the rental income accumulating to help grow the value of his pension fund, and also the ability to sell the property in the future free of tax, for example at retirement. So there are several considerations to take into account when you're buying commercial property within a pension. Firstly, there's going to be costs involved, for example legal costs, tax, also for example VAT. There will also be costs associated with the pension. These could be initial costs and ongoing costs. Once the property is held within the pension, it's no longer on the company balance sheet, so it can't be used as collateral for any loans, for example. The firm occupying the property within the pension, even if it's your own business, would still need to pay rent. There would need to be regular revaluations of the property and reviews of the rent on an ongoing basis, which could incur cost. There would still be ongoing expenses associated with the property and ongoing maintenance, whether or not a tenant was in place in the property. If the property is the primary asset of your pension, it could leave the investments held within your pension poorly diversified. Property is generally an illiquid asset, so it can take longer to sell if capital is needed at short notice. Hopefully this video has provided a useful summary of using a pension fund to buy commercial property, and also highlighted the potential options that we can use our pension that you may not have been aware of. If there's something you'd like further guidance on, please feel free to contact me or leave a comment below. Thanks for watching.